Hello everyone, welcome to my YouTube channel. In this particular video, let us solve one more problem in which you have to calculate the taxable income from house property. So the question is on the screen. So let us try to discuss the question. So Mr. X, who is a resident, owns a big house. So he has a very big house, the construction of which was completed in May 2015. 50% of the floor area is let out for residential purposes. So 50% is LOP. 50% is LOP. Next. On a monthly rent of 3,200. So he is given a monthly rent of 3,200. However, this portion remained vacant from 1 month. So vacancy is there. So 1 month it was vacant during 25% of the floor are used by the owner for the purpose of profession. As I told you that ಏನಾದ್ರು SOP ಪ್ರಾಪರ್ಟಿನ ಅವನು ಬಿಸ್ನೆಸ್ ಅಥವಾ ಪ್ರೊಫೆಷನ್ ಮಾಡೋದಕ್ಕೆ ಬಳಸಿದ್ರೆ ಅದಕ್ಕೆ ನಾವು ಯಾವುದೇ ರೀತಿ ಡಿಡಕ್ಷನ್ಸ್ ಕೊಡೋದಿಲ್ಲ. So that will be taxed under different head of income. That will be not taxed here. While remaining 25% of the floor are utilized for the purpose of his resident. So SOP. In remaining 25%, he is staying. So other particulars they have given municipal valuation, standard rent they have given, municipal taxes paid they have given, repairs always have told that repairs should be ignored. Repairs na consider ಮಾಡಬೇಡಿ, repairs should be ignored. Interest on borrowed capital for repairs, yes, this will be given. Ground rent also that's that should be ignored. Now ground rent you don't consider it. So with this information, we will compute the taxable income. So 4 columns you have to take, particulars column. First column will be house 1, that is 50% LOP. House 2, it is 25% SOP. House 3, he is told 25% SOP, but he is using it for his own business. Now, let us start. So, first you have to compare the municipal rental value with fair rental value. So they have given that municipal valuation is 60,000. 60,000 is for complete building. Only you have to calculate 50% because only 50% of the property you have let out. So 60,000 into 50% will be 30,000. Fair rental value. They have not given any fair rental value in the question. It will be 0. Out of this, or whichever is higher, it is 30,000. Next, this is known as notional rent. This notional rent should be compared with standard rental value. ಈ notional rent ನ standard rental value ಒಂದಿಗೆ compare ಮಾಡ್ತೀವಿ. Standard rent is 90,000. 90,000 is for complete building, but only 50% of the building you have let out. So 90,000 into 50% you have to do. You will get 45,000. So out of these two, whichever is lesser, 30,000 is lesser. So 30,000 will be considered as reasonable expected rent. 30,000 na reasonable expected rent anta consider ಮಾಡ್ತೀವಿ. From this reasonable expected rent, we have to compare with actual rent. So reasonable expected rent na actual rent ಒಂದಿಗೆ compare ಮಾಡಬೇಕಾಗುತ್ತೆ. So reasonable expected rent we have found out it is 30,000. Now we have to find out the actual rent. It is for only house 1 because house 2 and house 3 are SOP. So they have told that on a monthly rent 3,200. So what happened is, just think carefully. Per month this is taking a rent of rupees 3,200. Then they had a vacancy of 1 month. 1 month the house was vacant. So 3,200 is for 1 month. So you have to do 2,200 for 12 months. So 3,200 for 12 months will be 38,400 minus unrealized rent. Unrealized rent is 0. So it will be 38,400. Out of these two, whichever is higher, so it will be considered as gross annual value before vacancy period loss. From that, you have to subtract vacancy period loss. So they have told in the question that the house remained vacant for 1 month. So 1 month there is a vacancy. So for house 1, 33,200 is per month rent. So 3,200 into 1 month will be 3,200. That has to be subtracted. After deducting that, you will get 35,200. That 35,200 is the gross annual value after deducting vacancy period loss. GAV after deducting vacancy period loss. From that, you have to subtract the municipal tax paid by the SSC. So whatever the municipal tax the SSC has paid, that has to be subtracted. So the total tax paid by the SSC is 12,000. In that, we'll only consider what is the tax he has paid for LOP. So LOP is 50%. So 12,000 into 50% we have to do. 12,000 into 50% will be 6,000. So 6,000 is the tax paid by the SSC for the LOP property. So 35,200 minus 6,000 will be 29,200. That is net annual value. Now for this we will give deductions under section 24. First deduction is standard deduction, and standard deduction is 30% on NAV. NAV is 29,200. On that 30% will be 8,760. Second deduction what we will give is interest on borrowed capital. So in the question they have given that total interest was 28,000. In that we will give for 50% interest. We'll give the we will give the deduction. So for house one it will be 28,000 into 50%, that is 14,000. So from 29,200 subtract 8,760 minus 14,000, you will get 6,440. That is the total income. That is the total income. Now come to the second and third house. As it is an SOP, till NAV everything will be 0. SOP ಆಗಿರೋದ್ರಿಂದ NAV ತನಕ ಎಲ್ಲ 0 ಇರುತ್ತೆ. Standard deduction will be 0 because there is no NAV only. But interest on borrowed capital, it is there. So interest on borrowed capital 28%. Second properties 25% is the proportion. So for house 2 we will give 28,000 into 25%, that will be 7,000. For third property, it is used for own business. As it is for used for own business, we will not give any deduction. So it is a negative balance. Write the negative balance like that, only 7,000. So one side we have profit and one side we have loss. So it is completely loss because loss is more than property, more than profit. So we have a loss from HOHP, house property. How much is the loss? 6,440 minus 7,000. 560 rupees is the loss. So there is no profit from house property. There is a loss from house property. This is how we need to solve the problem. Hope you have understood how to solve the problem. If you have any doubt, please put your doubts in the comment box so that I'll respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with the next video.